What's going on, guys? Naeem here. Today is one of the most momentous and important days in Bitcoin's history because you can see for the first time today, we've reached this level in price action that we only reached in the 2017 bull market when Bitcoin hit 20,000 for the first time. And we're currently in a double top formation. We are looking at the gold to Bitcoin chart inverted. By the way, if you're appreciating this content, make sure to like this video. It really helps out our channel. But I'm going to talk about why this chart is way more important than the Bitcoin to US dollar chart, which the US dollar is an inflationary asset in comparison to gold, which is a hard asset. So today is really the time that Bitcoin has reached the previous all-time high. It wasn't a couple days ago. And of course, the US dollar has devalued against the Great British Pound and the Euro. And so this is the most important chart to watch. So we'll get into some Bitcoin to US dollar technical analysis, but I do want to say congratulations to those that took our Ripple trade yesterday. We caught the bottom of Ripple and over 35% gains in several hours from this trade. And it was actually a buy limit order. So I sent this out to our premium members before the price had even reached this level. So congratulations to those that took that trade. We'll go over why we took that trade, and I'll go ahead and uninvert this price scale, and we'll get straight into our Bitcoin technical analysis, because exactly what we talked about yesterday is what happened with Bitcoin. Of course, I'm not surprised. I've been in this market for so long that it's almost predictable, especially an asset like Bitcoin that I've had the opportunity to trade for such a long time. You can see we talked about what was going on in the symmetrical triangle yesterday, and we had a chance of breaking out of this, and we were right around this area here when we were talking about it yesterday, and I said that it was going to most likely break out or break down towards the 70% level of going towards the apex of this triangle, and we were most likely going to come and retest this weekly open. It's exactly what happened, and I talked about us closing those hourly candles below the weekly open being the first indicator of a breakdown, and that never happened. And so exactly what we talked about happened, where we came right back up towards the end of that apex is when we went and broke through. And for the time being, the price action is quite slow. In my opinion, that's a good thing, because our target here right around that $30,000 level is still valid, especially since we've yet to see that blow off top. And of course, we looked at that gold to Bitcoin chart just today hitting that high from 2017. That is so important, especially for those that believe in the Great Reset. You don't want to be looking at Bitcoin against the US dollar all the time, because of course the US dollar is an inflationary asset. So if you want the true valuation of Bitcoin, why not look at another hard asset? Why not look at the real gold asset instead of, US dollars, where Bitcoin is gold 2.0. So why are you looking at gold against a currency versus Bitcoin against the currency versus Bitcoin against gold 1.0, right? And so in my opinion, that chart's a lot more important. I want to talk about this XRP trade, and we'll go into more of a Bitcoin analysis to see where price may be headed over the next few days and weeks. But I do want to talk about how we went ahead and caught the bottom of this trade yesterday with Ripple. You can see this red line, 1750, is where we entered this trade. And I was really just looking to see, in the past, where have we seen a breakdown and a support level and a consolidation above. And you can see this right here was a little bit of a exception, and you always want to keep those exceptions in mind. But for the most part, you can see once, twice, that 1750 acted as a support, and this was really why I chose that level for that trade. It was this exact moment where we saw that initial breakout. And so you can see for those that took that trade yesterday, within a few hours, if not a few minutes, depending on when you took the trade, we sent it out right at this level. And of course, as soon as it came down, it popped up, and then that resulted in over 40% gains, which for those that took the trade, congratulations. And we'll continue to watch and monitor these altcoins, because of course, Bitcoin's price action has been quite boring over the last few days when it comes to trading, when we're looking at some of these other altcoins that are popping 40-50% a day. And so we'll watch those just as much as we're watching Bitcoin. But I want to talk about where Bitcoin may be headed here. Now, understand that from the analysis yesterday, we talked about the breakout from the symmetrical triangle, which we've yet to see the target of, which is right at that $30,000 level. But I think that it's good that we're seeing a little bit of a slowdown here, because that is going to allow this breakout to sustain itself a little bit better. And of course, if we start to come up and we do form that blow off top, don't be too surprised. So I'd be very careful right now when it comes to Bitcoin, especially looking at that gold to Bitcoin chart and realizing that it was today that we've really hit the previous all-time high from 2017. I do want to mention with Ethereum to Bitcoin, a lot of you guys are asking me on the Discord whether I'm still bullish about Ethereum. Not much has changed in the last 24 hours, but if we do pull up these moving averages, you can see here We're currently forming this slightly bearish price action with this moving average. We're below this 100-week moving average when it comes to Ethereum. And of course, you can see here, this weekly candle has 4 days left to close. I don't think this is a big deal. This was a very bullish candle. This could just be a fake out. I really believe if we even look at this daily chart, you can see here we're still above that weekly open, which to me is extremely bullish for Ethereum to Bitcoin. So regardless of what happens to Bitcoin, whether it goes up or down, I believe that the Ethereum to Bitcoin chart is still going to give us the promise that we've been talking about, which is the the institutions hedging away from Bitcoin into other coins, and of course Ethereum being the only institutionally recognized asset outside of Bitcoin when it comes to institutionally graded products, right? And so that weekly open, the fact that we're staying above it is important. I think if we keep that in mind when we look at this hourly chart, we want to see, are there times that we're going to close below this weekly open on the hourly? The first time we did, we saw this bullish engulfing occur here. You can see with that candle. So that to me is extremely bullish for Ethereum. Things are still looking good for Ethereum despite the lack of price action that we're seeing with Bitcoin right now. Now, interestingly enough, we look at gold here. You can see gold is really tightening up in this area. So even if Bitcoin continues to higher highs, when we're looking at that gold to Bitcoin chart, gold could also take off at any moment, and that could form that true double top when it comes to that gold to Bitcoin chart. But because that's so premature, we don't want to go ahead and jump to conclusions just yet. And then keep in mind, we have the largest CME gap ever for Bitcoin still just hanging there. It's about a $3,000 CME gap, and so I expect that at some point or another to get filled. Now, interestingly enough, we saw this bearish daily candlestick on the Bitcoin chart, but it's not actually present here on the CME chart because it was during the weekend, which was pretty interesting to me. I was looking at that the other day, but you can see if we continue to come up and we do form a blow off top, there's a high chance that will happen here soon. And realize that when we look at that gap on the weekly chart, you can see the last time we started forming gaps like that on the Bitcoin CME chart was the previous top for that short-lived bear cycle. Now, I wouldn't really call this a top, but this was a top for this time being, and you can see we started gapping up, and then that's when we started to come down and fill those gaps. And so this big gap here on the weekly chart is something to keep in mind still. And of course, on this main Bitcoin chart, I've got all those gaps drawn out here. 23,795 is really going to be the target there. And so when it comes to Bitcoin's micro analysis, I think this is going to be extremely important to watch here. Realize that volume is starting to show that bears are coming in, but I wouldn't say that bears are in control. You can see we had this large sell stick come in as soon as we broke that all-time high again, and realize that this is just the Bitcoin to US dollar chart. And so when we're looking at Bitcoin to gold, it's a completely different ballgame, and that's something to watch. And I will be keeping you updated if you're in our Discord when it comes to that chart, because anything could happen in the next few days. And by the way, Happy New Year's for those that are celebrating the holidays. That is coming up, and it's going to be a very exciting 2021. Now, what's really cool is when you look at China's traditional market, you can see we just formed another high here. This is an all-time high because in 2015, I think we were a lot higher. But you can see for the most part, when it comes to our new age economy and China's traditional market, you can see we're continuing to increase in value. We talked about this yesterday. Japanese traditional markets yesterday formed a new all-time high, and even Warren Buffett has talked about starting to diversify outside of the United States. And so we're seeing that present here, and we're also seeing that in the European markets. We're starting to see a little bit more strength despite what Boris Johnson is doing in Britain, but that has nothing to do with the European markets, of course, but it is in that side of the world. A lot of stuff stirring around there, but for the most part, what's happening right now is we're starting to see capital, still go towards risk-on assets, and the DXY chart, which is a very good indicator of asset inflation, especially when we're looking at real estate, cryptocurrencies, rare collectibles, and precious metals, that is still showing quite bearish price action. I think there's a high chance that we do exactly what we did here in January of 2018, which is kind of just sit here a little bit and consolidate, allowing assets to kind of revalue themselves a little bit. Because if this starts to break down, then Bitcoin's definitely going to 100,000 US dollars. I mean, this breaking down is a huge sign of continued asset inflation, and knowing that 20% plus US dollars that were printed this year, that is a bearish fundamental aspect of what's happening. And then when we look at dominance, I think that's also very important to watch here. We talked about this ascending support line that dates back towards 2017, and we found that resistance here, and we also failed to form a higher high because we couldn't reach that 73% dominance mark, and that was actually the start of the previous altcoin cycle, is when we hit 73% Bitcoin dominance and then altcoins started to gain fuel. We've yet to come up, and that is actually a good thing in my opinion when it comes to altcoins. We don't want to come up and break this when it comes to Bitcoin dominance. We do want to hopefully see some downside here, because that will allow altcoins to continue further, and that confirming and validating our thesis when it comes to Ethereum against Bitcoin. Of course, when we look at others' dominance, what I'm still watching for, and this is going to change here in the next couple of days, is going to be this weekly close. Now, just as we looked at with Ethereum to Bitcoin on the weekly chart, we're kind of showing this slightly bearish candle, but it's still very early in the week, and this typically, from my experience, is a fake out, and it looks like that's going to change, and we're going to see Ethereum to Bitcoin actually increase there. And when we look at the others' dominance, it's kind of the same thing. We're kind of seeing this stall here, but we really want to see this come up and test these weekly moving averages, because if it doesn't, then it could be very similar to what happened with the dollar value, of course, when we did break down here from those weekly moving averages and didn't retest it and continued the bearish price action, versus actually testing it and that validating that this was a very good opportunity to get in altcoins, like it was here back when we broke down from the moving averages and did retest it, and that showing that yes, that was the validation of the altcoin cycle. So that's what we're going to be watching here. And of course, other than that, I think the biggest thing to realize right now is with Bitcoin being at this high, I really like to show this chart here. We'll go ahead and invert this so that you guys can have a better viewpoint. But you can see here, we're double topping here. This is very important to keep in mind right now, because this is truly us reaching the 2017 high, and that's today. It wasn't a couple days ago when we reached the all-time high in US dollar value, which is an inflationary asset like I mentioned earlier. So this to me is extremely important, and I will continue to watch and monitor this for you guys. And if you appreciate this content, once again, make sure to like this video, and I'd love to hear you guys' thoughts in the comments below about gold against Bitcoin. Do you guys believe that gold's market cap, being a $10+ trillion market cap, is going to start flowing into Bitcoin, which is only at around a $500 billion in market cap right now? I'd love to hear your thoughts in the comments below. And with that being said, I'll see you guys tomorrow for New Year's. Happy holidays to all of you, and snipers out.